Assalamualaikum and good day to Sir Muhammad Fairuz and fellow friends. Before we begin our presentation on the fundamental financial accounting and reporting, let me introduce ourselves first. My name is Zuhaira binti Zulkifli and I'm honored to be your lead presenter today. Before we dive in, let me introduce the dedicated team behind this presentation, Ruzana, Nazatul and Aiman Haziq. The main focus of our assignment is to understand and present the financial, accounting and reporting practice of a sole proprietorship or partnership business. Our goal is to understand how this business record and process their daily financial transaction to prepare complete financial statements. While conducting this assignment, we faced a major challenge. It was difficult to find sole proprietors and partnership that keep a full set of accounts and follow a complete accounting process. This made it harder for us to get detailed information. However, we managed to find one sole proprietorship business that was willing to share their journey in managing their accounting record throughout the business. We choose Kopi Kita, a business involved in specialty cafe or coffee shop operations, including taking orders, preparing food, and supplying it to customer. In this presentation, we will share the business background of Kopi Kita, how they manage their accounts, and also analyze the strength and weakness of the accounting process they use. The name Kopi Kita is actually a local Malaysian term meaning our coffee, which perfectly encapsulates their community-focused and accessible brand identity. In terms of business type, Kopi Kita operates as a specialty cafe or coffee shop. It is a small owner-operated establishment that focuses on providing a curated menu of handcrafted coffee, a variety of snacks, and fresh pastries. They are primarily a food service business, serving both coffee and other food items. You can find this hidden gem at Setia Alam, Selangor. Regarding owner's capital, specific details are private business information not available in public snippets. However, general business plan analyzed for similar generic cafes in a busy neighborhood projected a total initial capital requirement of approximately 15,000. This overview gives us a solid foundation of the business. Next, we will discuss how they manage their financial processes and the accounting methods they use.
Hi, I'm Nazatul. Today I would like to explain the business characteristic of Kopi Kita Coffee. Firstly, Kopi Kita Coffee operates as a partnership business. The business is owned by two partners with Mr. Azimuddin as one of the owners. The company is officially registered with SSM, which means it operates legally under Malaysia's business regulation. Secondly, regarding the type of liability Kopi Kita Coffee has unlimited liability. This means that the owner and partners are jointly responsible for all business debts and losses. If the business faces financial problems, their personal asset may be at risk to settle any obligations. Third, in terms of capital contribution, the capital contributed in cash by the owners. This capital mainly used to purchase coffee machines and other equipment. Each partner maintains as a separate capital account to record their individual contributions. Next, for the profit and loss sharing, it is based on the partnership's agreement. Profit and losses are shared according to the agreed ratio. However, if there is no specific agreement, the profit and losses will be shared equally among the partners. Lastly, regarding accounting records, Kopi Kita Coffee keep monthly sales record manually. These records are prepared and supervised by both the owner and partners to ensure accuracy when they documenting the business accounts.
Thank you, Naza. My name is Aiman Haziq. So now I would like to present about the business item classification. Let's begin. Firstly, we have assets. Assets are things that the business owns. There are two types of business assets, which are current asset and non-current asset. Current asset are things that can be used or turned into money quickly. The current asset of Kopi Kita are cash. Therefore, non-current asset are things we use for a long time, which are coffee machine, like the last symbolic espresso machine, furniture in the shop, like chairs, tables, and decoration. Next is liabilities. Liabilities are things the business need to pay. For this business, there are no current liabilities and no non-current liabilities, so the business doesn't have any loans or debt. Next is owner equity. Owner equity is the money the owner puts into the business. It also includes retained earning, which is money the business keeps after paying expenses. Revenue are the money in the business earns. This business earn money from the coffee sales, food sales, and delivery income. Finally, we have expenses. Expenses are costs that the business must pay to operate. Example of expenses for the business are cost of goods sold like bean, milk, and sugar. And then we have rent for the shop. Third, utilities such as electricity, water, and the internet.
Hello, hi everyone. Assalamualaikum. I'm Ruzana Yusof. I wish a great day to everyone who watched our presentation. Today, I will be presenting the recording process of the business, focusing on the accounting cycle used by Copycator, which is a cafe business. This presentation will explain how Copycator records its financial transaction, starting from source document until the preparation of financial statement. First, source document. Example of source document used by Copycator is include receipt from the point of sale system for food and beverage sales. Supply invoice consists of purchasing fresh milk, coffee bean, sugar, and bakery ingredients. Bank transfer slip for payment, utility bills, rent, and payroll records. Copycator prefer keep their order transaction document in mobile phone. These documents are collected by daily or monthly and used as the basis for accounting records. Second, journal entry. After collecting source document, transaction of daily sales are recorded based on point of sale system summarized. First, cash payment journals for recorded payment cash to suppliers. Second, cash receipt journals related to cash in sale. Third, purchases journal for recorded credit on purchasing inventory. Fourth, sales journals. This that we perform and compiled by the owner of Copycator. Third, posting to ledger. Once transactions are recorded in the journal, they are posted to the general ledger that contain individual account such as cash, sales revenue, cost of sale, inventory, account payable, wages expenses, and utilities expenses. This will help the business track balance for each account and monitor financial performance. Fourth, try balance. At the end of the accounting period, usually monthly, even though sales are recorded daily through the point of sale system, the try balance is normally prepared on a monthly basis at the end of the accounting period. Fifth process, adjusting entries. For a Copycator that using point of sale system, adjusting entries include recording accrued wages for staff at the end of the month, recognizing prepaid expenses like rent, unearned revenue from advance payment, recording depreciation of cafe equipment such as coffee machine, and adjusting inventory based on stock count. Lastly, financial statement. I will explain the financial statement of Copycator. Income statement shows Copycator financial performance for a specific period. Sales are recorded daily through the point of sale system after deducting costs of sale and operating expenses such as wages, rent, utilities, and depreciation. The cafe earns a net profit. While statement of financial position shows Copycator financial position at a specific date. Assets include cash, inventory, and cafe equipment, while liabilities include account payable and accrued expenses, and own equity represent the owner's investment plus net profit. Therefore, the point of sale system is essential in ensuring accurate and reliable financial reporting for Copycator. In conclusion, financial statement of Copycator help management evaluate performance, control costs, and make better business decisions, especially for hiring full-time and part-time. Okay, this is one of the source document at Copycator, which is received from supplier for fresh milk. This is invoice includes supply details, item purchase, total amount, and payment terms. This document is used to record purchases, expenses, and account payable.
Now, I will present three strengths and three weaknesses of the recording process at Copycator Cafe. First, Copycator has a complete accounting cycle. The cafe follows all the key steps such as using source document, preparing journals, posting to the ledger, checking the trial balance, making adjustment, and preparing financial specs. Next, I will explain the weakness. The first weakness is that the system integration is not clear. We do not know if the POS system posts sales directly into the accounting system. If everything is done manually, it can cause error or slow down the process. Second, copy kita does not mention any internal controls. There is no information about approval limit, separation of duties, or pre-numbered document. Without this control, there is a higher risk of mistake.
In conclusion, Kopi Kita successfully follows a complete accounting cycle and uses adjusting entries correctly for accrual accounting. That's a solid foundation. However, we found three main weaknesses. Number one, no system integration. The POS and accounting system are unlinked, risking manual errors. Number two, weak controls. No segregation of duties mean higher risk. And number three, and the last one, missing bank recon. They skip monthly bank reconciliation, making it hard to catch bank errors. Overall, while a basic are there, improvements in integration and internal control are necessary for better financial reliability.